What is a mortgage escrow account? How do mortgage escrow accounts work? Who's got my money? Why should I have them pay my bills and not me? In this video, I'm going to explain the answers to those questions because I know it's confusing. People don't understand why they're paying up front and they're paying per month, but don't worry. In this video, I'm going to explain to you why, how, and what to look out for. All right, Matt the Mortgage Guy, residential mortgage broker with you mortgage, licensed nationwide. Reach out to us, greatmortgagebroker.com. We'll help you with all your mortgage needs. In this video, I really want to jump into this question because it's one of the most popular videos I've made on this channel. How do mortgage escrow accounts work? It's such a common question that I get it over and over again when we're explaining the loan estimates to clients. They don't understand, what does it mean when I'm prepaying my property taxes and insurance? Why, if I'm prepaying, is it also included in my mortgage? I'm paying every single month. So rest assured, in a few minutes, I should be able to explain it, hopefully in a way that makes sense to you. Before I go into some details and use some numbers, which I think is always a good idea to use real life examples, let me just explain to you how it works, right? After you purchase a home, your lender establishes an escrow account to pay for taxes and insurance. Your county is going to assess property taxes. You're going to pay that. And then you've got homeowners insurance. It also might include private mortgage insurance if you've got a loan with mortgage insurance, right? So after closing, your servicer takes a portion of your monthly mortgage payment and holds it in a separate account, escrow account, until the tax and insurance payments are due. And then they disperse. Again, I'm going to use a real life example with real numbers. So stay tuned and I'll show you there. But one thing to keep in mind is that the amount required is a moving target, and people always get bent out of shape. Like my mortgage payment changed. I don't know what's going on. More often than not, if your mortgage payment changed, it's because there was an adjustment to your escrow account. They were holding too much, they were holding too little, and they had to make an adjustment. Right? Your tax bill and your insurance premiums can change from year to year. Your car insurance might go from one number to up 20% year on year. Homeowners insurance can do the same. Here in California, when we've got, as many fires and natural disasters as we got, insurance companies have to raise their premiums. So if your homeowners insurance goes up and your current escrow, account held by your servicer doesn't have enough money in it, they're going to have to readjust. We're going to have to hold $20 more per month. When this happens and they do an escrow analysis and it's short by $500, they'll give you the option. Would you like to pay that $500 in a lump sum and then take this new payment that is going to be, 40 some odd dollars more per month because we're needing to hold $500 more? Or would you like to raise your payment a little more and over time we'll pay off this $500 shortage? I can get into more detail about that, but really it's like such a specific, dependent on what the shortage is and who your servicer is that, we could analyze for hours on that. Know that whoever's holding that escrow account is going to analyze it like that every single year. And let's take a really easy example for numbers' sake. Let's say your annual property taxes are $6,000 and your homeowner's insurance is $1,200. That's a total of $7,200 a year that they have to hold to pay these bills. So they take that $7,200 per year and they divide it by 12, $600 a month. So every month, maybe you make a payment of $2,500 a month. $1,900 goes to taxes and insurance. $600 goes to this escrow account. And really, it's just $600 per month being added to, let's just call it a savings account. And if this savings account started with $2,000, after you pay them $600 in the first month's payment, it's $2,600. Then you pay them the next month's payment and it's $32. And you pay them again, you got $3,800 in that escrow account. It's showing up on your statement. You get to see it, escrow account balance, $3,800. But now, because you've got what did we say, $6,000 a year in property taxes, $3,000 of that is due. They bill twice a year, $3,000 and $3,000. So $3,000 is due. From that $3,800, they disperse, and they'll tell you, it'll show up on your statement. It'll show up if you have an online account, $3,000 dispersed to the county. Now you've got $800 in that account. Now it goes to 14 and 2,000 and 26 and 32 as 600 is being added, right? And it gets up to whatever number it's at, 1,200 gets dispersed to pay for the homeowner's insurance bill that's renewing for another year. And then whenever the next round of property tax, $3,000 goes to them. Every year they'll analyze this, and if they've got too much in that account, they need a little bit of reserves, but they can't hold too much. And they've got rules on how much they can hold. If they've got too much, they're going to offer you a refund and then adjust your mortgage payment accordingly. If they don't have enough, they're going to say, listen, we've only been withholding $600 a month from you, but when we analyze it, it's not $7,200 a year that we need. Your property taxes are now, call it $6,500, and your homeowner's insurance went up to $1,800. So now we've got 65 and 18. We've got $8,300. We type that into our calculamators, and we need to collect $691.66 per month. And, if there's a shortage, they're going to collect that in a one-time payment, or they're going to do whatever. They're going to increase your mortgage payment by $91.66 to make up for the shortage, right? That's how it works. And that's how, when you get something that says, there's an escrow shortage and your payment goes from $2,600 to $2,691, you're like, what the heck happened? They raised my mortgage payment. I get that a lot, right? We've closed thousands of loans, and they say this servicer raised my payment. They didn't raise your payment. They made an adjustment because the escrow account where they're paying your tax and insurance from didn't have enough in it, right? And so that's the essentials of how it works. Another area where people get really confused is upfront. You're getting a mortgage, and they're going to set up an escrow account, and you're going to get a loan estimate. And on page 2 of the loan estimate, you're going to have F and G. Let me call them back. Prepaids and initial escrow payments at closing. 12 months homeowner's insurance premium paid in full. Then 3 months homeowner's insurance. Why in the heck do you got to pay it twice? And then 7 months of property taxes. Well, down here, that's that buffer I spoke about. They need to have something in there in the account. You paid in January of 23 your 12 months of homeowner's insurance. But if we close late January and don't have a first payment till March, in order to have enough money in there to renew next January, they're going to have to take a few months of reserves for that homeowner's insurance. And just the same with the property taxes, let's collect 7 months up front, because we might have a bill that's paying for 6 months of property taxes due within a month of your first payment. And we haven't collected any money yet. So we need to collect up front to not only have a little bit of a buffer, but to be ready for those payments that are coming due. So hopefully this clarifies it for folks. It's, something that really, I understand how most folks get, a little bit confused by it, because it just, it's new for a lot of folks. And they're like, who's got my money? What's going on with it? The mortgage servicer is the person who, from closing until you pay off your loan, they collect your mortgage payments, they maintain the record of payments, and they manage your escrow account. That's all they're doing, is holding this money. Common question, do I get paid interest? You do. I just looked on one of my statements. I got $12 and some odd cents on one, $23 on another, and it just gets plopped into your escrow account. Interest paid on escrow balance. That's probably better than the banks are giving me on, a couple $1,000 sitting in those accounts. So to have a couple thousand in escrow, no harm, no foul. People want to know, do I have to have an escrow account? Depends on your loan type. So if you're getting a loan and you think this is not for me, in my personal opinion, you don't want to remember another thing to pay. You also don't want to be responsible for budgeting for that, because if you're like most people, putting that money aside every single month for that property tax bill is going to be a lot more effective and a lot less stressful than, boom, $3,000 tax bill shows up, then you got to figure out how to pay it. So hopefully this was helpful. I appreciate you watching. Like, comment, subscribe, share this with a friend. Greatmortgagebroker.com if you want to connect me and my team. If you're looking for an agent anywhere in the US, go to homeandmoney.com/Matt. If you're looking for other mortgage videos to learn more about mortgage stuff, I've got over 700 on this channel. So check them out here, 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 and here. Somebody, somewhere, please post some links.